Welcome to TradeTheNBI.com. This is John. This report is for the 30th of July, and you can see that, well, we've continued to move nicely within this, general soft bullishness that we've encountered here. Cyan dipped below red. Now we're getting, equivalently a DOC spread in what I would call kind of a flat, I call it a duckbill simply because everything tends to just go straight across on the readings, and that's not exactly strength from a short standpoint because you're not getting that dramatic, spike here like you see on the DOC spread right here where the red is fading and then you have cyan popping up strongly. Here it's just sort of like, we're just going across and everybody's in a ho-hum. And this is all in anticipation of how much the Fed is likely to cut versus not. So it's sort of just a suspended animation here, probably going to move back and forth within the general range. Obviously, you have the ABM green to the low side of this general range that's been taking place. And like I talked about before, when you get above that 30-22 range, you needed to stay and close above that. Otherwise, puts pressure moving right back down to the low side. So you got to see it close above that level to really kind of maintain this. And I was talking about this where we're having successive highs on lower and lower shakeout histograms here, meaning that the strength of it is just starting to wane. NASDAQ, it's been a little bit stronger, but you can get the same impression from it right there. We're not even in a reset category where you've had the dip of, a DOC red where it comes down and creates a new configuration. At least for the NASDAQ, you've got short-term buyers still keeping things alive. Theoretically, with a rate cut in the U.S., depending on its size, should skyrocket the euro. If it was in there, you can see they're really doing a defensive hold right at this bottom baseline, right around that 111 range. And it's kind of desperate action time here because while the eurozone is dead and all they're talking about is doing more easing, they have all of the fights going on with Brit exit still. And, even within the bloc itself, there's a lot of back and forth as to what's going to happen. So that turmoil is preventing the euro from doing anything. It's still probably overvalued, but the Fed isn't going to want to let that thing slide too much. And in defense of that, you're going to gold. You're probably going to even see cryptos take a new ride to the upside because it's just becoming clear that some of the debt that's being perpetrated here just isn't going to be sustainable, and it's going to cause some form of inflationary pressures, at least from an intraday standpoint. Started out with our little bit of weakness. We caught a little bit of a buy, went into a DOC spread as it rolled over here right at that zero line. It always becomes powerful to see that happen intraday on 5K. And this is taking place within a broader 50K buy signal that had been going on and produced a nice turnaround crossover. This was going to be suspect all along simply because even though with the steel moving above here, which is effectively coming from underneath, you didn't have a reset. In fact, the reset doesn't take place until all the way over here at the secondary signal for the sell. So it just sort of put it in negative mode. Now we have turnaround taking place right at this particular spot below the 23%, but dip below the red line. Complete cascade here. This isn't going to survive from a buy standpoint, at least unless you get some big turnaround here in the next bar or two for yellow moving back above magenta and that. So probably going to still fade a little bit lower than that. And good action. I mean, clearly seen here from the pink 2. The fact that you ended up again with the same below zero with the red DOC from a fade standpoint is just showing that there is still plenty of people willing to sell within the configuration. We can take a look at that 50K. So, been doing some work on it from a historical standpoint. Let's move up to current, where it took that, and that should give us new equity highs. Let's go ahead and take a look at the performance report on this. Slide that into range where everyone can see the bottom of it here. If I can get it to work on mine. we go. And yep, all the way at the peak, puts us at a 133. So, and from a periodic return standpoint, not bad at all. This corresponds with the daily. It had its previous sell from a viewpoint on that one. We can look at it for this year. Also been phenomenal. Performance graph wise, you can see that going all the way. I'll make sure that's in the screen. I mean, this goes back from 2003, and no question. Once we got past the Fed interaction, we've started to see a bit much more clean action as far as back and forth rotation, which is what the Opus really looks for in a general standpoint, and doing quite nicely. I have my other version that I run as well. It's even superior to this one. And what I'm probably going to start to do is separate the names on those so you can see the variations and detail what they are. But kind of exciting. What I was doing on this 50K though, that's going to be relevant to you, is setting up some barrier conditions that prevent some of the buys that take place on falling magenta, to avoid some of the small ones. And the idea being is, and if I go put this back up there, what I want to show you where I've been pushing to go with this is under the trade analysis, reducing the number of losers that would typically be in the setup. In this case, I'm looking at somewhere reducing between anywhere from 70 to 150, which successfully doing that without eliminating winners out of it will just skyrocket the profit factor and capability of it. It's just going to be exciting to see it come to fruition on that standpoint, and it's just going to make it a little bit easier to follow, because I know that the toughest part of this one has always been, and I'll put it back, is that win rate. It's tough when you're only winning 40-some% of the trades. You can see it even in the periodic returns. It's just a difficult one for most people to grasp, that you can lose that often and still have a net profitability. And it's because we're allowing those runners to go so long, and the short side is capped at a very specific level. And we can see it from drawdowns as well as in favorable excursion, that kind of setup as a percentage, because our profit is so much stronger to the outside outlying capabilities, whereas all the downside is contained within a very set parameter. And it's preventing that kind of drawdown, which is really what I'm actively doing, because we even see it, if I go back to it real quick again, I know I'm popping it back up there, but in the performance graph, eliminating the big valleys that can take place within it, and some of that's just about stopping some of these entries that we can see, and we usually discuss, and no, I really wouldn't be all that attracted to it until it makes this turnaround, move back right over here. And so once that's finalized, I think that it's going to become just fantastically apparent how easy it's going to be to trade it and follow it along. And so I think that's an exciting alteration going into the new month, and you'll probably see your indicator renewals come in for August today, and that way you'll be all set to be ready for the end of the week and the start of the new month, so that there's no lag for you at all in having everything running smoothly. As always though, I will update anything that's relevant on the Skype chat and keep you informed on those updates as they take place. Trade well, and we'll talk again later.